Hello, everyone. Welcome to Options with Doug, streaming live on Monday and Wednesday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. You can post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X. My name there is @DougPless. Just a couple of quick reminders. There are 2 more days for the Bookmap Trading Companion Competition. Actually, it ends tomorrow, the 30th. You can go to bookmap.com for more information. And also, you can find information about Bruce's pilot program to help you develop an edge. Here are the key tenets to my approach to trading. This is the basis of my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures. That certainly applies to the large cap tech stocks like the Magnificent Seven stocks, as well as the equity index futures like the S&P 500 and the NASDAQ 100. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their dollar exposure with ES futures. And for the NASDAQ 100, NDX is the underlying index, QQQ is the much more liquid ETF version of that index, and the NQ futures contract is a derivative of NDX. And just like the S&P 500, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a 2-step process of trading. The first is planning, and I use positional analysis. I look at how traders or market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow on Bookmap and real-time market maker hedging flow on Spotgamma Hero confirm my thesis. And for setups, and when I talk about setups today, I will be focusing on an underlying asset. Setups in that asset can be taken with futures contracts, shares of stock, or options, depending on the asset as well as the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. And hello, Laughing Stock. Welcome. Glad you're here. Here's my agenda for today, Monday, September 29th. First of all, I'm going to go over news items, economic data and events for today as well as the rest of the week. Then I'll go through my positional analysis. Then I'll review some setups from earlier today. Then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, let's get started with news items. And I'm going to take a look at the Spotgamma dashboard home screen, at the events calendar. So starting today, there were a number of Fed speakers throughout the day. Tomorrow, JOLTS data comes out, job openings data comes out at 10 a.m. And also the U.S. government is set to shut down unless the Congress intervenes before Tuesday at midnight. So if Congress does not intervene and the government does shut down, that will potentially impact the release of data, government data, later on in the week. So more about that in just a minute. All right, so JOLTS data on Tuesday. Wednesday, 8:15 a.m. ADP data, private payrolls data comes out. And then at 10 a.m. ISM manufacturing PMI. All right, Thursday, 8:30 a.m. Eastern Time, jobless claims. Also note Tesla deliveries come out, I believe, Thursday morning. That's for Q3. And then on Friday, the big data release of the week, pending Congress resolves the shutdown situation, would be the jobs report, 8:30 a.m. Eastern Time. And then 10 a.m. ISM services PMI comes out. So the jobs report, obviously, the big data release of the week. And again, pending Congress resolving the government shutdown. All right, so that's the data for the week. So let's move on to positional analysis now. I'm going to start with the S&P 500. This is the ES Futures and Bookmap. And before I take a closer look at this chart, I want to step back, take a look at the underlying index, and that's the S&P 500. And let's go start with a one-year chart, one-day, one-year chart. So the rally that began in April, toward the around the first week or so in April, continues. And let's take a look at more recent price action. This is the September rally. So this is the rally. There was a pullback right at the end of August. And then the rally resumed September 2nd. And then the first pullback came day after September expiration. That's September expiration right there. And it looks like SPX is trying to recover. And note 6,700 was the resistance. All right, let's take a look now at a closer time frame. Let's go to a 30-day, 1-hour chart. So there's that September rally. Resistance at the 6,700 call wall. And the pullback began Tuesday last week. Support right around 65.70. And now today a little bit more consolidation. So the pullback began last Thursday and now bumping up into resistance here. All right, let's take a look at the levels on this chart. I'm going to start with the expected moves. This is the lower and upper weekly expected move based on the options market, based on the closing price for SPX from last Friday. Those levels remain in place for the entire week. And then the dashed blue lines are showing the lower and upper daily expected move, also based on the options market, also based on the closing price for SPX from Friday. Those levels change every day. I do post expected moves for SPX, ES, and NQ every day the day before for those index products. All right, so SPX bumped up into its upper daily expected move today and now trading back down at lows of the day. All right, the dark red lines on this chart are showing Spotgamma levels. These are based on gamma-weighted open interest. They're provided to Spotgamma subscribers. Let's take a look at the key daily levels. First of all, the absolute gamma strike has moved back down to 6,000. That's a strike where large absolute positive and negative gamma. So that's where most of the gamma-weighted open interest is concentrated, well out of play. Next level up is the put wall at 66.10. You really can't see the label there. It's that green label at 66.10. That's a strike where large net negative gamma that can be expected to act as support. That level did move up from Friday. Next level up is the volatility trigger VT there. Then a Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. Above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. That tends to subdue or decrease volatility. And it looks like SPX is trading right around that volatility trigger at 66.40. Actually trading about 10 points above at 66.50. And that is based on Spotgamma's older total open interest model. We'll take a look at Gamma based on their new synthetic open interest model in just a minute. And that level also moved up from Friday. And then finally, the call wall remains at 6,700. That's the strike order largest net positive gamma that can be expected to act as a resistance. All right, so again, for SPX, volatility trigger, put wall shifted higher, absolute gamma strike shifted lower. All right, let's wrap up our view of SPX with a 1 minute chart. So you can see the rally began, or the pullback ended, however you want to look at it, last Thursday. Friday's move up was just a continuation, and it looked like the early price action was just a continuation of the rally that began on Thursday, but SPX found resistance right at this combo 3 level. That's 66.77. That's just below the upper daily expected move. And now maybe finding support at the 66.50. That's been a key level for quite some time. That's a large gamma 4 level. And that's just above the 66.40 volatility trigger. And then there's the put wall down below. All right, so again, key for today, resistance at the combo 3 level, 66.77, and potential support at the 66.50 level. And we'll take a look at the trace gamma heat map in just a couple of minutes to see if we can get a better picture of the gamma, a gamma view at that level. See if there's a big gamma strike at that level, providing some support. All right, let's take a quick look at SPY, the other underlying index component. Let's zoom in on this. Actually, let me go back out so we can see some of the levels down below. All right, so this downtrend in SPY really began just before the cash open. The only spot gamma level really in play right now is this volatility trigger at 661. And note for SPY, the volatility trigger and absolute gamma strike did shift higher compared with Friday. All right, that's SPY. Back to Bookmap now. In Bookmap, so I've talked about SPX levels, SPY levels, being very important to my analysis, and I show those levels on my Bookmap chart. So here's that SPX 66.77 combo 3 level that I talked about as resistance. And then there's the SPX 66.50 large gamma 4 level, looking for that to potentially act as support. That was a key level last week. And note there's a difference in price between ES and SPX. And today that offset is right around 53 points. That offset is right around 53 points. So ES minus SPX equals 53. So the SPX 66.50, I'm showing that at ES 67.03. And I do post those index relationships that I use every day in Discord. All right, so again, I have SPX and SPY levels on this chart, as well as key ES levels. There's the ES 6700, and so far that level has actually been the lowest low of the day. And then there's the ES upper daily expected move, and I do calculate that separately or independently from the SPX expected moves. All right, so that's the S&P 500. Let's take a look at NASDAQ. And this morning, NASDAQ was stronger than the S&P 500, but now also moving down toward lows of the day, which is right around NQ 24,800. So just like the S&P 500, I have the underlying index levels shown on this chart, QQQ and NDX. So let's take a look at those, and then we'll get back to the NQ futures here in the Bookmap. All right, so I'm going to start with QQQ. Let's zoom in just a bit. All right, QQQ. Note this level right here, the 601.25 combo 3 level. That's the highest Spotgamma level for QQQ. And this morning, QQQ did find resistance right at the 602 level. And now maybe finding support at the 598 level, which is below the call wall at 600. All right, so that's QQQ. And for QQQ, the volatility trigger shifted higher, put wall shifted lower compared with Friday. So let's take a look now at NDX. All the Spotgamma levels are down below. And this is the highest Spotgamma level, this combo 2 level, at 24,675. All right, back to Bookmap. So again, I have QQQ and NDX levels on this chart. There's the resistance at the QQQ 602 level. Here is that's the QQQ 600 call wall. So now QQQ trading below its call wall. And then just above that is the NQ upper daily expected move. Laughing Stocks asked, when the options market makers buy futures to hedge, doesn't that create short positions for the futures market makers? Does this also create other hedging flows? So market makers don't want to be short or long. So they're just responding to customer trades. They always want to remain delta neutral. So when traders, let's say, buy SPY or SPX calls, market makers take the opposite side of those trades and they sell calls, and they have to buy futures to hedge their delta exposure. So again, they always want to remain delta neutral. So they don't want to be short or long. All right, so that's NASDAQ. And then we'll take a look at setups in just a couple of minutes. So let's wrap up our positional analysis by taking a look at gamma. So let's go to the Spotgamma trace gamma heat map. A little bit of a change from earlier today. So let's step back. Let's take a look at the gamma picture just right after the cash open here, or at the cash open. And at the cash open, all right, so this is the gamma lens in our gamma heat map. The blue shading is showing, and this is for SPX, the blue shading is showing positive gamma, red shading showing negative gamma, and we can equate gamma with volatility. So in positive gamma, blue shading, we're looking for slower movement, market makers to trade against price, buy dips and sell rips. And then in red shading, negative gamma, we're looking for market makers to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. So we're looking for more trending markets in negative gamma, red shading, and more mean reverting markets, price action, and blue shading. So slightly positive gamma here with a large gamma strike at 66.70. So let's step through time. And there have been two key gamma strikes at 66.70 and 6700. And again, we'll step through time. And we can see how as price moves lower, that 66.70 gamma is disappearing and then building at 66.50, and then negative gamma coming up above, and that's at 1 p.m. Now we're at 1:40, so current time. So now we see blue shading down below, blue gex bars, positive gamma. So it looks like pretty good support down below the 66.40 volatility trigger. Labeled hedge wall there, but it's the volatility trigger. And then red shading up above. So if traders start buying calls, selling puts, and price can move higher pretty quickly, potentially up to the call wall. And there's that 66.50 strike that I mentioned before. And then the volatility trigger below that at 66.40. So note 66.50 is a 99 percentile strike. And hedging flow algos do tend to drive price toward those large 99 percentile gamma strikes. And that is what Spotgamma calls the seek and destroy algo. All right, let's take a look. Let's go back to Bookmap and check something real quick. Go back to ES. So that 66.50 would be right around, and there it is, 67.03. Positive gamma, 99 percentile. So seek and destroy moved S&P 500 down to that strike, and then it found support. We'll talk more about setups in just a couple minutes. All right, so let's move on now. Let's take a look at get the setups, and we'll start with the S&P 500. As always, I'm going to start by taking a look at what options traders have been doing today. And this is the hero signal, hedging impact real-time options. What this chart is showing is options trades of market maker hedging activity for the S&P 500 index components. That is SPY and SPX, we've already talked about those. Also ES and XSP. The white line is price for SPX, and the purple line is the hero signal, combining puts and calls. So a rising hero signal indicates traders are buying calls and or selling puts, and then a falling hero signal indicates traders are taking negative delta options positions. They are buying puts and or selling calls. And again, that is the S&P 500 index components. And now let's separate out puts and calls. So they're moving pretty much in sync. Earlier today, it looked like the call buyers were driving price. I'm going to have to jump to avoid the auto zoom. Get back. All right, so again, this is the S&P 500 index signal. And let's zoom in on this just a little bit. So you can see there was kind of a mild bullish opening drive with traders buying calls. That's shown by the orange line. Again, traders buy calls, market makers sell the calls. They have to buy ES futures to hedge their delta exposure. Then they started selling puts as well, and that pretty much abruptly ended right around 10:09. Call buyers take the foot off the gas, forming a nice peak pattern there, call exhaustion, and then just after 10:45, traders start selling calls, buying puts, and price moves lower. And that is bearish momentum. The flow alert that came in a little bit late, but signaling that shift in hedging flow. All right, so to sum it up, bullish opening drive, call exhaustion, put exhaustion, and then bearish momentum starting right around 10:47, something like that. And that really continues, although pretty mild given the positive gamma support down below. And then there's another signal that we can take a look at for the S&P 500, and that's the S&P 500 equity signal. And this is showing options trades and market maker hedging activity for all 500 stocks in the S&P 500 index. Showing a little bit more bullish momentum in the morning. And this is a pretty typical pattern where the S&P 500 index signal is a little bit more sensitive and shows the turning points typically a little bit more clearly. And in this case, what this is showing is this bullish momentum stopped pretty abruptly. Call buyers took the foot off the gas. Traders started buying puts, and then price reversed lower. And again, remember both the put and call line for the index components were moving lower. So the S&P 500 index is moving lower, and then the S&P 500 equity signal pretty much flattens out. That's a typical pattern for a bearish reversal. All right, so let's go take a look at Bookmap. So before the cash open, a little bit of a trend line break. ES breaks down below the upper daily expected move. Then after the cash open, it was a pretty choppy, mildly bullish opening drive. And the S&P 500 can't make it past this combo level, 77, combo 3. Aggressive sellers start to come in. That's shown by the magenta volume dots. Price breaks down below this trend line, below VWAP, shown by the light blue line. And already at this point, cumulative volume delta, shown by the magenta line, is falling, as well as sell stop orders, shown by the yellow line, help to fuel that move lower. And then notice also the iceberg line, showing a large order, large traders selling with iceberg orders. And that happened before the move down. And then note as price started to move down, the large traders came in buying with iceberg orders. So that's pretty typical behavior. They're fading the move. They're buying weakness and selling strength. All right, so again, current picture, strong positive gamma at 66.50. So far around that level, acting as support. All right, so short setup this morning, really the place to enter the short was either that second test of the 77 level or a breakdown below VWAP. But overall, pretty mild price action. So about a 30-point move lower. All right, that's the S&P 500. Let's take a look at NASDAQ. And again, NASDAQ found resistance at the 602 level after a very brief bullish opening drive, chop, then breakdown Then support right around 24,800. And again, note the iceberg behavior, buying weakness. And they stop since price seems to stabilize. But cumulative volume delta shown by the dark blue line that changes to magenta really started moving lower just after 10 a.m. Let's see what options traders are doing. Let's go back to Hero. And we'll stick with puts and calls. And we'll go to the NASDAQ first. Zoom on this just a bit. So you can see the very brief bullish opening drive. Traders buy calls, market makers sell the calls. Buy NQ futures dash their delta exposure. And that tapers off pretty quickly, and then they finally take the foot off the gas. And then start selling calls, buying puts just before 11 a.m. Price moves lower. So that's the NASDAQ index components. Looks like some call buyers have come back in. And those index components, NDX and QQQ. Let's take a look. There's another signal that we can take a look at for the NASDAQ. That's the Mag 7 signal, showing options trades and market maker hedging activity for the stocks known as the Magnificent Seven. That's Apple, Amazon, Google, Meta, Microsoft, NVIDIA, and Tesla. And those stocks make up a large component of the NASDAQ 100 and the S&P 500 as well, and tend to often drive the market. All right, so again, brief bullish opening drive, slows down, gets a little bit more choppy, and then finally peaks right around 1050, and that's when NASDAQ starts to move lower. Now consolidating, it looks like again some call buyers have come back in, put sellers. All right, so that's NASDAQ. So a couple ways to play that. Get it in at the open, bullish opening drive. Let's zoom in just a bit. Then play the reversal. Noticing these lower highs. Then a breakdown below the combo 3 level as aggressive sellers start to come in. Cumulative volume delta moving lower. You can see all the magenta volume dots. Price moves lower. Finally finding support at the NQ 24,800 level and QQQ 598. Laughing Stock asked, could you please describe your technique when it comes to drawing trends? I'm not real exact. I just look for series of higher lows, like right here. Or lower highs. So a series of higher lows. And let's draw this with NASDAQ. And then lower highs. All right, let's take a look at some stocks, and then we'll get to live market. So let's start with a couple of semiconductor stocks. Let's start with NVIDIA. So it looked like the AI trade was pretty strong this morning. This is NVIDIA, very bullish opening drive. You can see all the green volume dots, a lot of aggressive buyers. And the heat map of Bookmap shows limit sell orders at 184, 183. Looks like they were consumed at 183 and maybe consumed at 184, then came back in. So traders aggressively buying NVIDIA at the open. Let's see what options traders are doing. So let's go to NVIDIA here. And this is a classic pattern. Aggressive call buyers at the open. Flow alert comes in, signals significant options activity, get your attention. And this very bullish portion of the opening drive lasted less than 10 minutes. And the call signal actually, the slope flattens out a bit. And then right at 10:50, call buyers completely take their foot off the gas. That fuel that had driven NVIDIA higher is gone now, and NVIDIA starts to move lower. So the call buyers take the foot off the gas. Market makers no longer have to buy stock to hedge their delta exposure, and price starts to either consolidate or move down in this case. So two ways to play that. Get involved in the opening drive. Buy calls, buy stock. And then second way to play that is note this consolidation. That it could either be a call peak or just a flattening out of the call line. And there you could sell a call spread or buy a put spread. Very typical pattern. And let's go back to Bookmap. All right, so that's NVIDIA. And Aesthetics had asked questions about looking at some Spotgamma tools to help with analysis in a couple stocks. So there are a couple stocks I want to take a look at. One is NVIDIA, and I'll show the Spotgamma tools that I use. All right, so let's go. I'm going to go to NVIDIA here on Equity Hub. All right, so let's go back. Let's check prices in Bookmap. All right, so note NVIDIA opened up just above 180, traded up to 184. All right, back to Spotgamma now. This is the new synthetic open interest put and call impact chart. It's showing positive gamma above the zero line, negative gamma down below. So that's gamma notional. Market makers gamma notional in response to order flow from buy-side order flow, retail traders, hedge funds. So remember, we equate positive gamma with low volatility and negative gamma with high volatility. So if price, let's see here, price there's 180, right above the low volatility point at 179. So what I was looking for is the potential for price to accelerate higher toward this high volatility point at 200. So as price moves higher, volatility is increasing as gamma becomes less positive, tending toward negative. So I'm looking for acceleration higher. So that's one of the main tools that I look at. And then also on Compass Guided View. And this is just the basic guided view showing these stocks here in this quadrant with cheap volatility and upside potential. That's based on the risk reversal rank as well as the IV rank. So two factors looking for a bullish trade at NVIDIA. The fact that NVIDIA is in this quadrant and also the synthetic open interest put call impact chart. And then the other tool that Aesthetic mentioned, DPI, not quite sure that is. Dark pool, if that's dark pool, I don't look at that. All right, so let's move on and CWR, welcome, glad you're here. Wants to take a look at Oracle. Yeah, we can take a look at Oracle. I've got a list of stocks I want to go through. I do not have that in a Bookmap right now, but we can take a look in Hero. All right, so that's NVIDIA, classic pattern, bullish opening drive, and then foot off the gas, price consolidation. Next stock, AMD. Another semiconductor stock, very strong, very similar pattern. Bullish opening drive, call buyers, aggressively buying calls, market makers sell the calls. And they have to buy stock to hedge their delta exposure. The most bullish portion of that lasts for about 10 minutes. And then ends about, in this case, right around 11 o'clock. So remember, that's when the indexes started to roll over, 10:50, 11 o'clock, something like that. So that's AMD. Looks like it is trying to recover. All right, so there's NVIDIA. Let's go to AMD. Similar, but a little bit stronger right now. Aggressive buyers. So there's that 10-minute, very strong bullish opening drive. Bit of consolidation, but still upward toward the 164. Those are limit sell orders in the order book, shown by that dark shading at 164. Looks like they were consumed. And again, call buyers took the foot off the gas, price moves lower. Note also the sellers starting to come in now. More magenta volume dots. Cumulative volume delta now trending lower. And Al asks, welcome, glad you're here. Is it possible to see the Gamma X levels in Bookmap? Well, in a way. So, I know what the key levels are already, and then I mark them in my Bookmap chart, but there's no direct way to see the GEX levels from Trace in Bookmap. All right, so that's AMD. Again, AI semiconductors very strong this morning. All right, next stock. Let's take a look at Tesla. Tesla kind of doing its own thing today. That's pretty typical bearish day in NVIDIA. Tesla, it's been very strong in the past couple of weeks. So let's go take a look at Hero, see what options traders have been doing at Tesla. All right, so we have two bullish opening drives, two consolidation. Let's take a look at Tesla now. And just the opposite. Zoom in a bit. So it looked like a very brief bullish opening drive, lasted just a couple minutes. It's 9:32. Call buyers quickly take the foot off the gas. Full alert comes in. In this case, it's indicating a potential reversal in hedging flow from positive delta to negative delta. And Hero makes slightly lower high, shifts lower. Traders start selling calls, buying puts, and price moves lower. And looks like now consolidating. Finding support right around the last closing price at 440.42. That's shown by this line right here. All right, so very minimal bullish opening drive. Call peak. Traders start selling calls, buying puts, so that's bearish momentum on the way down. All right, that's Tesla. All right, next stock I want to take a look at is Robinhood. So in addition to AI stocks being strong this morning, crypto was as well. And also Robinhood, I think there are potentially a number of factors. Robinhood continues to move higher. So that is a bullish opening drive, bullish momentum when traders buy calls and sell puts, and it really continues. So the factors potentially driving price higher for Robinhood. Could be crypto, could be the poly market, could be the recent addition to the S&P 500, could be the FINRA ruling about the pattern day trading rules. FINRA has approved an amendment to the pattern day trading rule, removing that $25,000 limitation for margin accounts. So all those factors potentially helping to drive Robinhood higher. Traders buying calls, market makers sell the calls. Call wall breach early on at 126, and Robinhood continues to move higher. So let's go take a look at Bookmap. Go take a look at Robinhood. Continues to move higher, very bullish. A lot of aggressive buyers in Robinhood. There's the 126 call wall. So when that when a stock breaches its call wall, that means traders at the call wall, long calls, market makers short calls, and as those calls go deeper in the money, their delta becomes more and more negative, and they have to continue to buy stock to hedge their delta exposure, since again they want to remain delta neutral. All right, last stock I wanted to take a look at. Again, crypto strong today. Could be a potential sign for a market turnaround. There are many stocks to play crypto. One here is Strategy, MSTR. We'll see what options traders are doing. Oops, I thought I had saved that tab. There's MSTR. And continues to move higher. Similar picture of Robinhood. Bullish opening drive. Full alerts coming in. Call wall breach. Looks like there was a bit of consolidation around the call wall before Strategy broke higher. And then right around 11, call buyers slowed down, but they start to come in after lunch. So now the call buyers are back at it, and they've been pretty steadily selling puts as well, and Strategy moves higher. Hello, Stephen. Welcome. Glad you're here. All right, so that's Strategy. And then CWR wants to take a look at Oracle. Yeah, we can do that. Kind of a choppy day on Oracle here. So if you recall, Oracle gapped up pretty substantially after reporting earnings and then has been consolidating ever since. Pretty weak, actually. So there's Oracle today, not much going on. All right, does anyone have any other stocks they want me to take a look at? Let's go back and check on the indexes. Let me shift to the total signal. Go to the S&P 500. And let's check and see what zero DTE traders are doing today. All right, so the purple line is showing all expirations. And this is for the S&P 500 index signal. Purple line showing all expirations today, tomorrow, Friday, next month, next year. And then the teal line is showing options that are expire today. So it's next expiry. And for the S&P 500, that would be options that expire today, the zero DTE trades. All right, so it looks like today so far, looking at the delta notional over here, the zero DTE trades are making up just a little over half of the total delta notional, which is negative. So that's a little bit smaller than the typical role they play, up to 90% or so. All right, Laughing Stock wants to take a look at Micron. Sure, we can do that. So let me turn off this. Let's go to Micron. Again, I don't have Micron on Bookmap. Shift to puts and calls. Bullish opening drive, just like other semiconductors that we took a look at, AMD and NVIDIA. Bullish opening drive, call wall breach, foot off the gas, consolidation. Sorry about this. So Micron strong, just like AMD and NVIDIA semiconductors. All right, let's go back to the S&P 500 index. Let me shift the total signal. I have to jump back. All right, so it looks like SPX found support right around that 66.50 level, and traders are starting to take positive delta positions again. And that's the S&P 500 index signal. Let's check equities. Same thing. In this case, starting to move up before the index signal, just after 1 p.m., whereas the index signal started to move higher right after 1:30. Let's go back to Bookmap. Let's take a look. All right, so again, this positive gamma zone acting as support. Let's check trace. All right, so the gamma 99 percentile strike at 66.50 remains. So that was definitely an example of seek and destroy. Taking price down to that level. And now the hero signal is showing. There's a hero signal right there. Traders taking positive delta positions. After heading down to that 66.50, 99 percentile strike. And now moving back up into this red shading negative gamma zone up above. So there's the potential for faster movement as price moves up. Let's check some of the other heat maps. We'll check delta pressure. Delta pressure, blue, showing buying support below, and then buying support above as well. And a little bit of a kind of a neutral shading at the current price level. We'll check charm pressure. So charm is showing buying support, selling pressure due to time decay. Now charm is showing red selling pressure due to time decay at the current price level. Back to gamma. All right, so it looks like now SPX just starting to enter that red shading negative gamma zone. And Stephen, sorry to hear about your Ethereum trade. All right, back. Let's check Hero again. Still moving higher. Go to Bookmap. All right, Bookmap shows ES moving higher, more green volume dots coming in, showing some aggressive buyers. Let's check NASDAQ. Let me clean up all these drawings. All right, NASDAQ continues to move higher as well. Looks like the large traders with iceberg orders here are getting their way. All right, now NASDAQ and ES both grinding higher. Anyone have any other stocks they want me to take a look at? Any questions, comments? Back to ES. All right, continues to grind higher. Aggressive buyers coming in. Let's check Euro. All right, Hero continues to grind higher. ES grinding higher. Let's go back and check some of the stocks that we took a look at. NVIDIA. NVIDIA still consolidating. And Laughing Stock asks, in the case of credit spreads, do you wait for the price to reach the Spotgamma level or to take profit or some predefined target? Yeah, I usually do. So let's talk about that. So one way to play this would be to sell a call credit spread up here. And you can do this 0 DTE or longer. You certainly have the opportunity to do that in 0 DTE. And two ways to play that. So 6650, that large gamma 4 level, that GEX level, large 99 percentile GEX level, would have been key target. So you can take profits there, or if there's still some premium left, you could sell a put spread here or buy a call spread, either one, and you would pretty much probably have a risk-free condor. So that's definitely a way I like to play this. So price finds resistance. You're looking at Hero, seeing that that topping pattern in Hero, multiple test of this combo 3 level. So you sell a call spread, price moves down, you can either take profits, or if there's still some premium left, hold on to it, sell a put spread at that support level, and then you have a risk-free iron condor. So that's one thing I'm looking for, always ways to get risk out of trades. S&P 500 continues to grind higher. Let's check Robinhood. Still moving higher. More aggressive buyers coming in. Strategy as well. And I believe Robinhood is probably making new all-time highs where strategy is not. Check AMD. Still consolidating. Tesla. See if it's making any attempt to move higher. And still consolidating. Check NASDAQ. Looks like some sellers are starting to come in. Maybe just a pullback. Check ES. One last look at Hero. All right, so the Hero signal, S&P 500 index signal, could either be just pulling back, or that looks like that may be the case. But now ES back up toward the, or SPX back up toward the mid-afternoon highs. Let's check the equity signal. All right, starting to flatten out a little bit. Nodosky, sorry about that pronunciation. Welcome, glad you're here. Asked, do you ever trade options for GLD and USO? No, I don't. Sorry about that. We can check GLD here real quick. But gold definitely has been in play this year. So it looked like a bullish opening drive in GLD, and then traders have taken the foot off the gas. Back to the S&P 500, starting to slow down a little bit. All right, everyone, I want to thank you very much for watching. Thanks for your questions and comments. Remember, watch out for the politics. Will the government shut down or not? That could impact the data releases later on this week. And then we'll talk about it on Wednesday. All right, everyone, have a great afternoon. Thank you very much for watching. Thanks for your questions and comments. And I will see you on Wednesday at 1:30 p.m. Eastern Time. Bye.